What an interesting day and month. We're looking at the worst month for the S&P 500 since January of 2016. Today, a late day sell-off, the worst two-day slide for the S&P 500 since early February. What do you make of this, and will we see a new lower low?
Well, a couple things to keep in mind despite the volatility. We came off of 15 consecutive monthly gains for a total return basis. So the fact that February is a big down month, yes, but we're well overdue, right, for a down month. And then just the recent action, we've had two back-to-back down 1% days, but those followed two back-to-back up 1% days last Friday and Monday. So, if we talk about where does that leave us, we think big picture, we're still fairly constructive. The big question of late is, do we need to retest the lows that we saw in February? We don't think you necessarily have to retest the lows. We think you could. We think that's a less likely scenario, even despite the volatility here.
And so your chart here, take us through this.
Yeah, so this is one of the reasons that actually keeps us fairly constructive here. There's been a lot of talk about volume or lack thereof. So what we have here on the top, S&P 500. On the bottom is what's called on-balance volume. And all that is if the day is an up day, you take the volume for that day and add it to the cumulative total. If it's a down day, you subtract it. So it gives you a good measure of how the volume's tracking for advancing and declining volume. And you can see that that actually made a new high recently, even though the S&P itself has not made a new high. So the volume profile is rather good. If you go back to the August 2015 lows, where we actually did see that significant retest, August and September, on-balance volume made a much lower high. It was a much weaker profile. So we think the volume picture does bode well here.
That's a very interesting point. So you think that area of congestion up there is likely to break to the upside ultimately? Maybe not right away, but ultimately.
We think there's good odds that we at least see new highs. Another interesting thing is there's only been 2 years in history where January has made an all-time high, and that's been the high for the year. So usually history says when you make an all-time high in January, you at least see a higher high later in the year, even if that ultimately fails.
Another good fact. So what about momentum?
Yeah, so I think when we talk about momentum, we like to look at some of the longer-term momentum indicators. So this is S&P 500 with monthly MACD. And what we like about this, it tends to be very slow-moving, and it doesn't give you very many false signals. So when you see a flip in the MACD from a buy to a sell, you want to take notice. You can see the last time we got a monthly buy signal was November 2016, right around the election. We've been on that monthly buy signal since then. And you have to go back to the spring, I think it was around April, May of 2015 to see the last time we saw a sell signal, and that was actually pretty timely as it preceded the August 2015 drawdown.
And what about yields? Because, of course, one of the triggers for all the volatility that we've been seeing, rising yields. You have a great chart here of the 10-year yield. Take us through it, please.
Yeah, so we think that ultimately we do break above that kind of 3% area that's been in focus for so many. That probably is a breakout that happens down the road, let's say the next 2 to 4 months. In the near term, what's giving us pause that we actually do see that breakout is positioning. And for the interest rate market, we can look at positioning in 10-year Treasury futures. So that's the bottom panel. This is the large speculators net position. And you can see down there on the bottom, large speculators are about as net short Treasury bonds. That's the price that they have been going back the last 5 or 6 years. And you can see the circles tend to be where those speculators start betting on lower bond prices, higher yields, and you tend to see a bit of a consolidation or a pullback. So we think that's where we're at, pullback, and then maybe ultimately do break through later in the year.
Great observations. Thank you so much, Jonathan Krinsky of MKM Partners.